Good morning. Today is Wednesday, February 9th, 2011. This morning I'm saying keep talking. And that's what we've been seeing over the last 2 days to start the week here, and what we're going to see a little bit later. We've got Fed Chairman Bernanke coming out to defend U.S. monetary policy. But it's not, this whole idea of, the rhetoric surrounding what you're doing is not exclusive to the U.S. And just last night we saw it actually come out of New Zealand. Now, I mentioned yesterday, let's take a look right here. You can see the Kiwi is down across the board there. Let's just look at Kiwi dollar real quick. You can see that the Kiwi's a little bit lower from recent swing highs that it put in, and basically what happened is that the finance minister English, he came out and he said that it's possible that New Zealand falls into recession in the second half of the year. So that sort of sent the markets careening a little bit lower. As we know, recession's a technical definition. It means that you have GDP growth that is slowed for 2 consecutive quarters. So they don't have the normal economic drivers there that are pushing the economy forward. But, to hang the old recession card out there this early in the game, I think is a little bit premature. So you can see the Kiwis down, and as a result, it's taken the Aussie a little bit lower as well. Now, with the Aussie, their economies are similar to New Zealand. New Zealand imports from Australia. If they slow down, that means slower Australian exports. But this happened despite consumer confidence that came in Australia a little bit higher. So basically what we had overnight, we had the MSCI Pacific Stock Index was lower, and that took down the Aussie and the Kiwi. All right, so let's move a little bit forward here. See the euro. Euro's sort of flat versus dollar. All right. Now they have one of the emergency stability fund people. Policymaker, I don't even know what you call those guys. He's going to be speaking a little bit later to describe what's going on with that fund. There could be some fireworks there for the euro. Could be a potential game changer. So what we're seeing is that we have a lot more talking going on today, a lot more rhetoric than actual hard data coming out. And just earlier this morning, we had German exports came out for the month of December. They were a little bit lower than expected, coming in showing 0.5% gain versus an expectation of a gain of 1%. So that's kind of what we're looking at with the Europe. We'll just take a look at the pound. The pound's actually down versus dollar. Not exactly sure why versus dollar here. You can see it's a little bit higher against pretty much everything else with the exception of the euro. Now, what we had was the BRC shop price index came in, and it showed that prices increased 2.5%, which is some of the fastest growth that they've seen in a while. And, this all leads up to this rate policy meeting that's coming out on Thursday because, prices are seemingly going up all throughout the UK from different metrics and various readings, and it's really going to put pressure on the Bank of England to do something about inflation, which means that they may need to change monetary policy. So this has been an expectation and going on for some time. And you can see that the pound, it's versus dollar hasn't been so swell. If we look at euro pound, you can see that just recently, over the last couple of days, the euro turned it around versus the pound here. So there's a thought that they're going to have to do something about rates. But if they do, they have that conundrum going on. Well, what happens to the economy? Now, the economy's slowing down. The government's put the brakes on the spending. They've got these austerity measures. They're trying to get their debt under control. As of right now, the market appears to like that plan better than just about anything else that they're hearing from out of anybody else at this point in the game. But, we can look here. Pound has been increasing versus dollar. All right, just got shy of 163 recently and pulling back a little bit. It looks like maybe right around here at the 20-day moving average, there could be some activity, but it looks like it's due for maybe a little bit of a pullback, and we're going to see what happens. Maybe that happens with the rate policy meeting on Wednesday or on Thursday. Perhaps they change the quantitative easing program they have. They currently buy 200 billion worth of pounds of assets, namely bonds, to try and keep rates a little bit lower. Maybe they do something to that, or maybe they just come out with a rate hike. I don't know that they necessarily have the conviction to do it at this point, but it's going to be interesting, to see what the reaction is depending upon which way they go. If they don't raise rates, is that better for the pound? Because it means, things continue, inflation will continue to go on, and it means that they're going to have to see maybe even greater hikes down the road. Or if they do hike, is that seen as a good thing for the UK economy, perhaps slowing it down and just waiting to see how the metrics come in? So we're going to have to keep an eye on what happens there. All right, we also have some more dollar strength happening here. Just look at dollar versus loonie. All right, you can see we're coming back up and we're approaching parity again. And we're going to trade on either side of parity based on what oil prices are doing, based on the situation in Egypt, what's going on over there. And then not to mention we've got Bernanke coming out today, and he's going to give his comments to what's going on with the economy and how he sees things going forward. So so far he's been, pretty good at being tight-lipped, but I expect him to, do a little bit of yapping today to, try and quell investor fears, because right now the markets have been cranking and rocking here, all based on this QE2 proposition. And if they said that when they set up QE2, hey, we're going to have to go back and review it from time to time and make sure that it's still necessary. Well, what if they say, hey, this economic data looks great, let's just pull the plug on it? That could send markets reeling. We'd see some dollar strength in that situation. So I'm not, again, certain what's going to happen with Bernanke, but there's no other news really coming out for the U.S. today. So what we have for tomorrow, all right, and it's going to be somewhat more of an important day, is first thing in Australia we have their employment numbers. All right, that could be a game changer there. Maybe we see the Aussie pull back to parity. All right, get a decent employment number, and then we get a bounce higher to retest recent swing highs up here at around, say, 102. Well, it's not going to go to 102 immediately, but maybe around here at 101 area. And then we have the UK rate policy decision. So, those are the two big things for tomorrow. Today is just a lot of talk, a lot of hot air. We'll see people how they, either try and talk down their currency like they did in New Zealand, or if they are content to maybe let the thing go a little bit. Because, if you don't talk down your currency, and all of a sudden there's reasons for it to go higher, that's pretty good until the time when you do have to talk down your currency, because it's easier to do that when you're starting from a higher level. And let's not forget that all of these currencies are interrelated. All right, nothing trades in a vacuum. So these things trade in these wide ranges, and sure, you're going to see trends happening, and there can be vast movement depending upon what's going on in the world, what the risk themes are. But by and large, okay, you're going to see these things trade in a range, albeit a wider one. So keep an eye on what they're, or actually I should say keep an ear out for what Bernanke's got to say a little bit later. That could be a market mover. And other than that, just kind of follow along with the risk themes and trade what you see. So that's what I've got for today. Good trading to all.